Hey, this is Mike Swanson, Wall Street Window. I'll give you a quick update today of what's going on in the stock market. The price of gold is up $17. It's tapping right back on $1,800 an ounce. Silver is up 2.5%. Copper up almost 1%. Meanwhile, the stock market is down. The NASDAQ is down 60 points. S&P down 11. Those aren't really big moves, but I think for gold investors, this has been a very constructive week. Once again, we're seeing how the price of gold and silver are outperforming the stock market. If you want to beat the markets, you want to be in what is beating the markets. Now, I know the headlines, when you look at them today, that they make you feel uneasy. We have Carvana stock crashing. Why? Because it's on the verge of bankruptcy. Not a shock. It was one of the bubble stocks, bubble companies for that matter. Wells Fargo talking about a slowdown in the economy coming because of Fed hikes. Apple's talking about iCloud backups, and TikTok is scaring people. And here's some bizarre AI thing. That's where the mind of the masses are at. These digital fads in crummy stocks, and they're not in gold and silver. For example, this is Fidelity. And one of the interesting things about the Fidelity website is if you go to the research section, they will show you the top orders today by their customers. What are the tickers and stocks they're doing the most trading in, and are those sells or buys? So when you look at that list, Tesla is the most traded stock today, and it's mostly buy orders coming into it. Amazon is number 2. The SQQQ ETF, which is a short ETF, it's seeing more sells than buys. And then Apple and GameStop are on the list. But what I see when I look at this list is Tesla, GameStop. This is still where the minds of the masses are. They are trading like it is still 2020, and they're still playing the same stuff. Why is that a mistake? Because look at this. This is a chart of Tesla, and you can see it's down 3.5%. Tesla is, when I last looked 30 minutes ago, was the third worst performing stock in the entire NASDAQ 100. And it's at the top of the worst performers on the S&P. This stock has been lagging the stock market now all year, and when the market put in a low in October, Tesla failed to rally. It's below the lows of October now. It's a millstone stock. If you want to beat the markets, you want to be in the sectors, ETFs, stocks that are beating the markets. If you want to, and if you're serious about this, that's what you need to think about. You want to beat the markets, then do it. Don't be stuck in fad stocks. What about GameStop? Same situation. Here's GameStop below the October low, now trading below the November low. And you can see the indicator on the bottom, the relative strength plot, comparing GameStop with that of the S&P 500. It's a disaster. Amazon, same story. Amazon, near 52-week low. And you can see relative strength trending down almost every single month. These were the hot stocks of the past. They no longer are. And if I was in them, I would liquidate and move that money into gold and silver. If we look at GLD, the gold ETF, we can see it's up almost 1% today, and it's been outperforming the stock market since New Year's, outperforming the S&P 500. That's why the relative strength plot on GLD, which represents gold, has been trending up all year. SLV is also outperforming the stock market, doing much better than the S&P on this rally and really all year. That's what I want you to get involved in. That's what my videos are about. Things that are outperforming the market, trying to get you into winning situations instead of losing situations that then become millstones in an account. That's what Tesla is now. That's what Meta stock is now. Meta, another losing situation. But look, one of the big things happening in the markets is the US dollar index had a tremendous rally from New Year's up until the end of September, and then it rolled over. It broke the 50-day moving average, it plunged, It's now floating on the 200-day moving average. And the gold market tends to trade opposite of the US dollar index. And the reason why the US dollar index is now trading weak is because the Federal Reserve is set now to go from raising rates at 75 points to 50 points in December. 75 points is what they've been doing the past couple of quarters, and then they're going to pause, and that's going to mean this hawkish Fed that we've seen is now less hawkish, and then it's going to be neutral by February or March, and that's causing people to get out of the dollar and buy gold because look, inflation is still here, and if you have a less hawkish Fed without inflation down to 2%, the CPI, that's a really stagflationary environment. And that's why gold is something that people are getting involved in right now, more and more. And that's good for mining stocks. One mining stock I own is Newmont Mining, up 0.5% today. It's up while Tesla is dumping. I'd rather it be in something like Newmont or another stock I own, which is Wheaton Precious Metals. Look how how the relative strength has been shooting up since Labor Day. Get out of Tesla, buy Wheaton Precious Metals, buy Newmont, buy some of these big cap mining stocks or the GDX ETF, which I got a position in my IRA. That's what I think people that are trapped in the fad stocks of the past got to start thinking about. I know they were hot before, but they no longer are. And here we are coming to the end of the year where it's tax loss selling time. You sell losers now, that helps you reduce your tax bill next year, and you can realize those losses, shift that money into stuff that has the potential to continue to beat the markets and make you a market winner. That's what I'm all about, not being a herd trader. And I know that's what is encouraged for people to do when they got Robinhood accounts. They load up the app. All they see is what other people are owning. So they do what other people are owning. They see everyone's buying Tesla. They buy Tesla too. You can't make money in these markets doing what everyone else is doing. It only works that way at key moments. It only lasts a couple of weeks, like when GameStop was surging up for a week in January 2021. And then what happens? Everyone's caught hanging the bag, holding the bag, and then you're stuck, and that no longer works. So that's where we are at the markets. Really, when we look at them, not a whole lot going on today, I got to say. But that shouldn't be shocking. The S&P 500 rallied up to the 200-day moving average, and now it's just kind of like floating around. It's going to have to stabilize here, build a little bit of a base before it can go up again. So that's kind of what we're at this time. More bullish situations in other markets, other exchange traded funds. And today's action proves it again. Gold up almost $20, while the NASDAQ is down like 60, Tesla down 3%. You see the action, you understand the action, and get into the action where the money's being made. That's what you want to do. And if you like that kind of thinking and philosophy, hit the like button on this video so people will know that. And this is the first time you see me on YouTube, hit the subscribe button, hit the bell next to it, and then YouTube will send you an alert as soon as my next video is up.